Hello everyone, in this video we're going to learn how to trade stocks using Fibonacci retracement, and this is going to be another strategy. And you have to remember one thing: if you learn any strategy, you have to practice it more and more, and you have to get enough confidence on the particular strategy with the demo trading. Then only you can go and trade with real money. And you have to be patient. Learning will take a lot of time, so you need to spend a lot of time with Fibonacci retracement. And for the demo purpose, you can use investing.com. You can draw the Fibonacci tools in the real market, and you can get enough confidence if it is work for you. So in this video, we're going to learn four things mainly: what is retracement, and what is the benefit of trading with retracement, and what is Fibonacci retracement levels are, and how to enter a trade using a Fibonacci retracement, and how to exit a trade using a Fibonacci extension. So these are the four things that you're going to learn in this. Firstly, let's understand what is retracement. What is retracement? Retracement is a price correction or a price change in a massive downtrend or uptrend. And you have to remember, in stock market there is three major trends, which is downtrend, uptrend, and the sideways. But retracement can be found in only two trends, which is uptrend and the downtrend. So for example, when the stock price moves in a one direction, for example this is uptrend, right? So the price keep moving, and suddenly it will take a retracement here, something like that. The price will start falling, and after that again the price will rise. So this is a retracement. You can see it was moving in a one direction, later it had a one like pullback here, and after that again the price moving in another side. So this is called retracement. And if you look at the downtrend as well, when the price moving in a downtrend, again the pullback will happen, the price will jump again in the opposite, again the price start falling down. This can be found in a strong downtrend or a strong uptrend. Why does the retracement happen? Retracement happen, it's a very simple reason. When a stock moves, it moves in one direction, right? Example, uptrend. When the price moving in uptrend, people will see this trend, they will attract by the price, attract by the trend, they will join. So a lot of the traders will join in that, then they will push the price more and more on the top. And some of the traders will stop here because so they just wanted to exit the trade with profit. Result of this, the price will start falling down because few traders are selling the trade, they exit the trade. And here again the traders will notice this is the opportunity for them to enter because it is a strong uptrend. Now it's the right time, and also they're getting this price in a better price. Also they're getting in a better price, so they will enter a trade and the price will move us up. So what is the benefit of trading with retracement? So as I told you, the traders is push the price in one direction. More of the traders will come join, they will try to push the price, and some traders will exit the trade. Again some traders will come and buy this stock at the lower price, which can be benefit for them, and also at the beginning of the trend again. So when you're trading with retracement, you are getting two major benefits. You're getting a stock in a better price, also at the better position, because the trend will move again. So this is why retracement are powerful. So this is the main benefit that you can get from retracement trading. And how does we know that retracement is going to happen, and when we can actually find out retracement happen? So this is where we are using a Fibonacci retracement. And Fibonacci tool is a indicator, it's a part of technical analysis that you can draw the indicator, you can find out Fibonacci levels, you can find a retracement. And the Fibonacci has a lot of maths equation behind it, so I don't want to go into it because this video will be very technical to understand. I don't want to make this video really complicated. And Fibonacci tool is really interesting because the maths equation numbers what you're finding inside the Fibonacci, it can be found in nature as well, in galaxy or human DNA or flower petals or rabbits. There is a lot of interesting facts, so you can read it in internet. Also you can see a lot of videos on the YouTube as well to understand it. But in this video we only learn how to use the trade, how to use this tool to enter a trade and exit a trade. And to get the Fibonacci tool, you have to click here, what you're seeing here, and the third icon, which will be pitchfork on your screen when you open it, and there you're seeing a Fibonacci retracement. So to draw the Fibonacci, you have to find a swing low and a swing high. So I draw here one trend, right? For example, swing high, swing low will be recent lowest price and recent highest price. So when we look at this, this is our swing low and this is our swing high. To draw the Fibonacci, you have to point the swing low, then you have to drag it to the swing high. So now you can see I have drawn the Fibonacci. Let me zoom out a little bit. And this is how the Fibonacci tools are look. And here you seeing there is a lot of levels, right? This is all called retracement. And the major retracement levels, or popular retracement levels, are 38.20 or 50 or 61.80. So this is the popular level, and this is in a percentage also. It can be in a price when you open, which is 23.6 or a 38.2. It can be in price as well. Now it's in a percent, which is easy for you to understand. And a main thing you have to observe here, when a price move in a one direction, it will take a retracement, as I said. So if the price drop down here, if the price drop down, and if it is jump again on the 38%, once it touches the 38, if the price has showing a pullback, like its price showing a positive movement here, then it is the right time for you to enter a trade. So this is the strong level, which is 38.20, and if the stock price moved down up to 50 as well, you can wait and see. If the price had a bounce back or pullback here, that is the right time for you to enter a trade. If the price crosses below than the 50, if the price came here and if it crosses below than the 50, you need to be careful, because it can be a signal of reversal. The trend might be broken, the trend might be in going opposite way. So if it touches 50 or 38, that is the right time for you to wait for the price to pull back and get positive movement. Then you can join the trend and you can place your trade. For example, here the price was coming here, right? So it came in here, hit over 38.20, then it's also giving a positive signal. So if you're seeing a green candles in a row, or if you see a green candle after it hitting the support level, then that is the right time for you to enter a trade. For example, I will just place a horizontal line here. So for example, if this is our entry, just assume this is our entry, because it had a retracement here, right? It touched the 38, then after that it had bounce back. If the example, this is our entry, then the stop loss would be one line below than the entry. For example, below, when I said it's now 38.8, 38 point is our entry level, right? Below than that it's 50, so our stop loss should be on the 50. Next, if the stock price would have come and touched the 50, then it has a pullback here. Then if you are entering at a 50 level, then your stop loss should be on 61, because you have to remember one line below than your entry. So it might confusing now. So when I go to the real chart, it will be easy for you to understand. Just you have to understand the stop loss will be one level below than the Fibonacci level what you are entering. And where is your take profit? Take profit, we are using a Fibonacci extension line. For that, you need to click in this third icon again, and you have to go into the Fibonacci extension. So once you get the tool, you have to draw exactly how you draw the Fibonacci, swing low to swing high. And once the extension you saw, you have to draw that and to your retracement level. Where does it retracement? Last time it was 38.2, right? So you have to keep your retracement there and drag and drop. So once you've done that, zoom out little bit and you can see the level called 100, right? This is where we trying to exit the trade. The 100 level will be our take profit. So this is where we will exit the trade, and this is the Fibonacci simple strategy. And what I draw is just a drawing. When now I will walk you through the real market, then it will be easy for you to understand. Let me read off this. So now in a Tata Motors chart, and let me tell you this strategy only for the 1 hour time frame. So right now we are in a 1 hour time frame, each candle representing 1 hour. So I'm gonna take the Fibonacci tool on this third icon, click here, go to Fibonacci retracement, and a swing low, swing high we're gonna use. The swing low on this recent happen was here, and a swing high was here. Let's assume this is our swing high. The price was this, whatever the price you are seeing in the right, let's assume that does not happen. So when we draw the swing high, swing low, you can see we got a Fibonacci levels, right? So we are looking to enter trade if the price drop down to 38.20 and 50, if it has a positive movement. And you can see the price was here, and after that the price came down and it had touched the 38.2, and after that you can see a green big candle, right? So this is where we are looking to enter a trade. For example, if you would have entered a trade here, place your trade here, which is entry. Entry I will make it orange and I will make it little thicker. So this would be our entry. Then I will place my stop loss. So stop loss, you remember, we are placing one level below than the entries. The entry would be 38.20 with retracement. So the retracement happened 38.20, right? Then we're going to use my stop loss at the 50, which is 50 level is here. And you can see the price never hit the stop loss. And take profit the 100 of the extension, right? To do that, we need to go and get the Fibonacci extension. So same, swing low, swing high, then the retracement. So this is where the retracement take place. So once I draw this, my take profit would be level 100. So if I draw that take profit here, let me make this green. And now you can see I have entered the trade here. So I have entered the trader at this candle because I saw positive movement after it touched the support level of 38.2, and after that the price had a sideways, and after that the price bounced back, and you can see it went and hit our take profit, which is 100 level. So if you would measure this in a profit value, let me take a position tool, measurement tool. This my entry would be here and my exit would be here, and you could have make easily 90.22%, almost 20% in one single trade, and your stop loss would be here, which will be 8% of loss if you would have lost, and you would have make 20% of profit. So this is a Fibonacci tool you can use and you can enter. And this is the Fibonacci strategy, and I only doing it for only the buy orders, not for the sell orders. So before you do that in real market, make sure you are spending enough time with your demo trading and demo account, then you getting enough confidence, then you can go in the real market, then you can trade this using Fibonacci. So this is the one example I found. You can also find a lot of example in a lot of trades. So first thing you need to do, you need to make charts in a 1 hour time frame, then find a strong movement about uptrend, then you have to draw your Fibonacci swing high, swing low, then wait for the retracement levels 38 and 50. If it's crossed below the 50, then don't enter. It might be a signal of trend going to change, and later you need to place a trade after first positive movement when it touches a 38.2 or a 50. So once it happens, then you have to place your stop loss below one level than the entry, then you have to place your take profit, which is 100% of the extension. And this is the video for today. And apart from this, we also have our online awesome course which we call 21 day trading challenge, where you learn how to trade stocks like a professional trader, and it has a lot of advanced and basic lessons, and also it has awesome intraday strategies, and it's also included risk management and also the money management, how you can manage your risk in a particular trades. There is a lot of lessons which will be a very powerful course for you. So if you're looking forward to that, I have given a link on the description box, and you have also getting an early bird discount. And this is the video for today, and now hit the subscribe button, like the video, or drop us a comment. And thank you for watching. Have a good day.